Would you pay $14,000 a year just to keep your home insured? Because that's what some families in Florida are facing right now.
So we only have one singular homeowners insurance company right now that is willing to insure us, and it was to the tune of about $2,000 more than what we were paying.
I'm currently dealing with the same thing on my house. Our insurance tripled.
And here's the part that most people don't realize. If you don't have insurance, the bank won't give you a mortgage. That means no insurance, no home loan. This is becoming one of the biggest crises in real estate. And it raises the question, if insurance keeps climbing, who's going to be able to own a home in the years ahead? And why almost nobody's talking about it? Okay, so let's talk Florida first because this is ground zero. In 2009, the average homeowner here paid about $2,000 a year for insurance. That was still high compared to the national average, but it was still manageable. Fast forward to today, and that number has skyrocketed to $6,000. $10,000, even $14,000. Think about that jump. Imagine your grocery bill used to be $200 a week and then suddenly it jumps to $700 a week. You would panic, right? Well, that's exactly what's happening with insurance. And here in South Florida, coastal families are getting crushed the hardest. The closer you are to the water, the higher your bill. Some people are paying more for insurance than they are paying for their mortgage. And if you think that sounds extreme,
I'm just wondering why my homeowner's insurance went from $6,300 to $9,800. I'm right here with you.
I've seen policies in Miami where the monthly insurance payments look like another full car loan stacked on top of the mortgage. It's not just an extra bill, it's an extra life expense. Now, before anyone says, well, that's just Florida, let's zoom out a little bit. In California, insurance companies are pulling out because of wildfires. Families are literally getting letters saying, sorry, we're not renewing your policy. Imagine getting that in the mail. And in Louisiana and Texas, premiums are doubling after massive hurricanes and floods. And in Hawaii, after the Maui fires, premiums jumped 50% in a year. This isn't a one-state problem, it's a national crisis. Now, when the head of the Federal Reserve, Jerome Powell, warns that in the next 10 to 15 years, some parts of America may be so risky that people can't even get a mortgage or insurance there, that is a big deal. Jamie Dimon, the CEO of JP Morgan Chase, one of the nation's largest bank, has also said the window to prevent the worst effect of climate change is closing. And Glenn Kelman, the CEO of Redfin, has pointed out that lenders and insurance companies are already pulling back from high-risk areas like flood zones and fire zones. So think about it. When the Fed, the biggest U.S. bank, and a major real estate company all sound the alarm, this isn't just about higher bills. It's about some families possibly losing their chance to own a home at all. So let's break this down a bit. If you're a homeowner, insurance is not optional. Your bank requires it. So if your insurance company leaves or doubles your rate, you have two choices: paid or lose your coverage. But here's the trap. Without coverage, the bank will not finance your mortgage. So it doesn't matter if you've paid your loan for 15 years. If your insurance is canceled and you cannot replace it, you're at risk. And for buyers, it's even worse. Imagine finding a home you love. You're approved, you're excited, you're at the closing table, and then the insurance quote comes back at $10,000 a year. That could easily cause some issues. I've heard realtors here in Florida say buyers are literally walking away from the closing table once they hear the insurance premium. That's how serious it is. This doesn't just stop at homeowners. Renters are about to feel it too. When landlords see their bill go up from $2,600 to $8,600, like one landlord in California, they don't eat that cost. They raise the rent. And 3 out of 4 landlords say they plan to increase rent in 2026 because of rising insurance. And here's the scary part. You know those mom and pop landlords, the ones who usually care the most about their tenants, they are the first to fold. Reason being, they can't absorb these costs. When they do sell, they're usually not selling to another small landlord. They're selling to bigger investors or corporations. And corporations, they're not going to see tenants as neighbors, they see numbers. They'll raise the rent as soon as they can. So the insurance crisis won't just hit homeowners. It pushes renters in the hands of corporations. So what happens when thousands of families cannot afford insurance? Demand can drop. Home sales collapse, prices start falling, and that's already happening. Home sales just hit their lowest level in months. And Climate Research Group predicts the US could lose 1.5 trillion in housing value by 2055 because of insurance and climate risk. That's not just numbers on Zillow, that's families losing equity they've built for generations. And since 70% of Americans' wealth are tied up in their homes, this is wealth destruction on a massive scale. Here is something a lot of families are quietly doing. They're ditching insurance altogether and creating their own emergency fund for repairs. On paper, it makes sense if you set aside $10,000 to $12,000 every year instead of giving it to an insurance company. You could just build a solid disaster fund pretty quick. That's what some homeowners who own their house outright are banking on. But let's be real, most families don't have that kind of cash flow. And if a hurricane, a flood, or fire strikes in year 1 or 2, that entire savings plan goes straight out the window. So what do you do if skipping insurance feels tempting but it's not realistic? Well, if you have a mortgage, you don't really have a choice because the bank requires insurance. Your best move is to shop aggressively and don't just take the first quote. Work with independent insurance brokers who can compare multiple carriers. And sometimes they can find smaller regional insurers who will write you a policy when the big names won't. If you own your home outright, consider splitting the difference. Some owners do get a policy for major events and also set aside money each month for repair fund. It's not perfect, but it does give you a safety net if the worst happens. For everyone, invest in prevention. A new roof, impact windows, or better drainage, which can cut premiums and save you thousands. Insurance company actually reward those upgrades with discounts. At the end of the day, skipping insurance might sound like a solution, but it's a risky bet most families cannot afford to lose. The smarter play is to balance protection with preparation, even if it means thinking outside the box. And here's the big twist. When regular families cannot afford home, who steps in? Cash buyers, hedge funds, big corporations. Florida, nearly 40% of sales last year were all cash. Wealthy families and investors don't necessarily need a mortgage. They don't need insurance, they just write the check. So if a storm wrecks their house, they can fix it with cash. For them, it's just another line item. But for the middle class and the lower class, it's devastating. When these corporations start buying, they don't buy one house, they buy an entire neighborhood. They spread their risk and they reshape the community. And homeownership slowly slips further away from regular families. But what can sellers and buyers do? For sellers, be ready to address insurance upfront. Buyers want transparency. Highlight any updates, new roof, hurricane impact windows, any upgrades that can lower the premium. And price realistically. A home price fair has a better chance of moving in today's market. For buyers, don't just shop for homes, shop for insurance too. Get your quotes early. Do not wait until you're under contract. If coastal prices scare you, consider inland areas where premiums are typically lower. Make sure you include insurance in your budget when you're budgeting for your mortgage. These are small steps, but they can save you from a heartache at the closing table. So unless something changes, insurance could slowly rival the cost of a mortgage. Imagine paying $1,500 for your loan and another $1,500 for your insurance. That's not sustainable. When families leave neighborhoods that keep getting hit with disasters or rising costs, communities will start to feel empty. And when that happens, cash buyers and corporations are always the first to grab what's left. All of this can feel overwhelming. When you hear about families losing coverage, premiums doubling, and homes at risk, it almost starts to feel like the future of housing is completely out of our hands. But here's what gives me peace. Insurance companies and banks may change the rule, but God never does. Storms may shake our houses, but they don't shake his promises. Psalms 46 says, God is our refuge and strength, an ever-present help in trouble. Therefore, we will not fear though the earth give way and the mountains fall into the heart of the sea. That reminds me, no matter what happens in the housing market, we are not left without hope. Our security doesn't just come from policies or premiums. It comes from a God who provides even when everything else feels uncertain. This isn't just about insurance. It's about housing. It's about wealth. It's about who gets to keep a home and who gets locked out. If your premiums have jumped, or if you've got it that dreaded non-renewal letter, share your story in the comments. The more we talk about this, the harder it is to ignore. And that is how change starts. Insurance isn't just another bill anymore. For many families, it's become a second mortgage. And it's reshaping the housing market right under our feet. The fight for affordable home ownership is only beginning. And the next chapter is already unfolding.